how concerned should investors really be? Joining us now is Bespoke Investment Group co-founder Paul Hickey and CNBC senior markets commentator Mike Santoli. It's great to have you both here. Paul, I'm going to kick this one off with you because we have been beating the drum on the poor breadth in the market here. We've also been beating the drama on how expensive stocks look, particularly tech stocks and stocks tied to AI. The other thing we perhaps haven't been talking about as much is the fact that liquidity seems to be coming out of this market, too. Look no further than the downdraft in cryptocurrencies.
Yeah, I mean, I think you're seeing profit taking in all areas of the market right now. Tech is getting the biggest, most attention because it was up the most over the last few weeks. Palantir, obviously, the earnings last night causing the biggest headlines. But just let's put some perspective on this. This was the 12th time this year that Palantir has been down 7% or more. And you know what happened after the prior 11 times. So people have been worried about valuations for some time, and it hasn't mattered. This could be the time that it does matter. But I think in the broader scheme of things, you're starting to see signs that the government is going to reopen, and all the rotation into the safe areas of the market like tech over the last 6 weeks are going to start reversing. You're going to see some reversing of that trend as it becomes more apparent that the government is going to reopen, and areas that have lagged tied to the consumer should start to see some outperformance.
Interesting. Mike, want to get your thoughts on this market, especially since you have an S&P 500 that at least before today was trading at 23 times forward earnings estimates. That's above the 5-year average of 20 times. A NASDAQ 100 fetching a multiple of 28 times compared to 19 times in 2022. And yet, and I know you've been focusing on this too, an S&P 500 equal weighted index that is trading at a more than 25% discount to the S&P 500. Do you think we are going to see this rotation if the government reopens?
I don't know that it would be necessarily a kind of linear move from one bet, like the concentrated heavy index weights in tech, into everything else. But I think that there's, by one way or another, probably get a little bit of convergence there. I think the thing that I'm watching is not so much, just a kind of relatively routine profit taking in elevated tech, overbought across the board, NASDAQ 100, everything else, not just valuations, but just on a price basis. But I think the consumer cyclicals have a lot to prove here. Not to say they can't kind of be a beneficiary of some rotation, but what I've been focusing on is the degree to which there's been this kind of stealth growth scare working through parts of the market. I mean, industrials even are kind of equal weighted or kind of flat on a 10 or 11 month basis. So you had these parts of the market that were geared to the cycle that were really clear leadership, and now it's kind of a little more ambiguous. So, with the Fed kind of pulling back on its promise of a December cut, maybe that was a catalyst for a little more pressure there. But it doesn't mean it's over. It could just be a stutter step in that area. I just find it interesting that, breadth doesn't really matter in terms of style points. It only matters if it creates fragility, if those leaders start to back off and nothing else takes up the slack.
Well, we got earnings coming out. Amgen is out. The stock is up about 2.5–3%. The company beating on EPS and revenue. Product sales grew 12%, driven by 14% volume growth, partially offset by 4% lower net selling price. 16 of Amgen's drugs delivered at least double-digit sales growth in the third quarter. The company raising its full-year revenue and EPS guidance. And you see the stock off the initial pop, but still holding in higher. Paul, what about the small caps then in this market? Because largely they have not been a part of that big tech, of course, bid that the market has gotten upward. How should we expect them to perform, especially as interest rates have come down a bit, not as much as some want, but a bit?
Well, so think about it, John, in terms of smaller cap stocks versus not just the mega cap tech, but mega cap across the spectrum. Since the start of October, in just about every sector, I think, except materials, the market cap weighted version of the sector outperformed the equal weighted versions. So what that's telling you is that there's a lot of the bigger market cap stocks, which are less exposed to maybe a temporary hiccup from business disruptions during a shutdown, are going to be less exposed, whereas these smaller cap companies are going to be more exposed to temporary disruptions. And so right when the shutdown started, when it became apparent in mid-September that this shutdown was going to occur in October, that's when you really started to see the divergence between the equal weight and the cap weighted indices start to, widen. And then, today, I think it's no surprise that you saw the equal weighted index do better. You saw retail stocks actually finish the day higher.